All right, if you've been wondering what's actually happening in the Phoenix, Arizona Metro's housing market right now, this is one of those months where things get a little interesting. So let's start with mortgage rates because that's really what moved everything. In March, rates jumped pretty quickly from about 5.9% to 6.6%, and that was mainly due to the global uncertainty, especially around the Iran conflict and concerns about inflation. Now, here's what's important. Once new data started coming out, like unemployment improving slightly and inflation numbers being released, the market had already priced that in. So by mid-April, rates actually settled back down to around 6.3%, and they've been trending down a little bit. So the big picture, 6.3% is actually low compared to the last few years because since 2022, the average has been closer to 6.9%. So that should give you a little bit of perspective right there. Now, what did that do to buyers in the real world? Well, it did slow things down, but only temporarily. In March, contract activity was up about 10%, but in April, it dropped to just 1%. That tells us that buyers hit the pause button due to the Iran world conflict and market uncertainty. And if buyers have learned something over the last few years, is to be patient. As we know, rates spike fast when there is uncertainty, and then they usually come back down once things calm down. So if rates dip below about 6.25%, I do expect buyer activity to pick up again. Now let's talk about inventory. We saw supply increase earlier this year. January and February were strong months, but that actually stalled in March and in April. February was up 9% year over year, March only about 5% year over year, and April so far basically flat. So what does that mean? That we not only got buyers slowing down, we also have sellers slowing down at the same time. And when that happens, prices stay pretty stable. Even with everything going on, home prices have basically held steady. As far as markets go, we have been in a buyer's market since late 2024. But prices for most homes are within about 1% of where they were a year ago. And that's because real estate doesn't react overnight. It usually takes 3 to 6 months for prices to really shift if something major sticks around long term. Right now, the market's acting like this is temporary. Now, for sellers, not all price points are behaving the same. The weakest segment right now is condos under $300,000. There's more competition there. Inventory is up about 20% and prices down roughly 9.5% compared to last year. On the flip side, single-family homes in that 1,200 to 2,400 square feet range have been the most stable. That's really the sweet spot for the market. And something a lot of people don't think about, home size plays a big role in pricing depending in the city. Not all cities are the same. For example, in Phoenix, the median home is about 1,800 square feet, and the average price for that is around $482,000. In Chandler is about 2,000 square feet, and the price is around $558,000. And in Queen Creek, you're looking at almost 2,700 square feet with a median price of around $688,000. So when you're comparing prices, you really have to look at size and location together, not just the number. The areas of the valley that are struggling to sell and are losing a little more value than just 1% a year is the edges of town where there's a lot of new construction, because this increases competition and competition makes prices go down. So overall, here's the takeaway. The market hasn't crashed, but it hasn't really taken off either. It is still holding steady. Rates are calming down and buyers are watching, sellers are adjusting. We're in that in-between phase again. If you're thinking about buying and selling and want to know your specific situation and how that fits into this market, just reach out and I'll break it down for you based on your particular goals. I hope this was helpful, and until next time.